In this video, I will show you what you should do before you buy a stock. For example, right now, maybe you plan to buy a stock, but you are not sure. I will give you a little checklist to do so that you really understand what you are buying. You don't fall into a trap. You don't make a mistake. My name is Christophe Nour. I've been investing in the stock market for almost a decade with a performance of 25% per year in the stock market, and I run this checklist every time I want to buy something. So imagine you do your analysis. You want to buy something tomorrow, and now you will run this checklist. Okay, I have something to write. Perfect. Imagine you want to buy a stock for the long term. I'm not talking about trading. You want to buy and hold for a few years. To make sure you really understand what you are buying, let me ask you this simple question. Can you pitch the investment thesis to a child under 2 minutes? If you can, congrats, you can summarize this at a very simple and short format with simple words. That's fine. If you can't answer this question, if you can't explain basically what NVIDIA does, I don't know. I'm taking this example of NVIDIA because I don't know what they do really. You are talking about nanometers chips, about AI, the gaming companies, graphic cards, but I'm not really sure what this is about. So first, pitch. This is first bullet point. Pitch to a child. Let me put just pitch. The second point, to make sure it's very inside your circle of competence, that you really understand, is if you buy the stock today or tomorrow, and if the stock price drops by 50%, do you know what happened? Will you be able to understand what will happen? And you can take the example again about NVIDIA. If in 1 month the price of NVIDIA drops 50%, can you see the risks? Will you be able to see what happened? Oh, this is a drop because of this and this and this. Revenue decreased because of this and this and this. Or because it's competition because of this and this and this. Or some regulations in the US, chip act, this and this and this. Maybe you will not be able to answer this question because now you are feeling I don't know, maybe euphoric, maybe calm, I don't know, maybe chill, I don't know your state of mind now, but you are feeling optimistic because you want to buy a stock. The goal is to destroy this optimism and let the rationality come again, because maybe the stock will go up in the next few weeks, but maybe in 6 months it will crash 60%. Do you know what can kill your business? Do you know what can disrupt your business? Do you know all the threats? Or most of the threats? That's enough. Do you know what can destroy your investment thesis? Do you know the bear points, your bear arguments? So know how to destroy the idea. Let's put D for destroy the idea. What can happen? And if you can answer these questions, okay, NVIDIA dropped 50% because of this and this and this and this and this. Yeah, you can say NVIDIA is inside your circle of competence. You know the business very well, so you can be a long-term shareholder. If you don't know this, maybe you are not fit to be a long-term shareholder of the company. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. The other thing that is very easy is to check the valuation. Maybe you have an investment checklist. For me personally, I don't buy stuff with a PE ratio above 30, 35. So if I like a stock a lot and the PE ratio is 60, I'm not interested in buying. That's it. End of the business, end of the discussion. Regardless of what will happen, regardless of the pricing power, it's a strict constraint that I say to myself, and this is very helpful to avoid making stupid mistakes because valuations can come down very easily. You see, I mean, some businesses are priced to perfections. You can say, for example, Celsius Holdings, the energy drinks company, they were priced to perfection, but until they are not priced to perfection. And if they have any issue, the fall will drop to a more reasonable valuation. So this is the game of investing. You want to buy cheap stuff. Good stuff, cheap, basically. There is a book, great book by the way, Good Stocks Cheap. I definitely recommend this book. And yeah, this is the principle of long-term shareholder, long-term investing. Okay, next point, valuation. Oh, check them out. if a business has a moat or not. If you want to invest for the long term, you want to invest in superior companies, in companies that are better than competition. And to make sure a company is better than competition, they need a competitive advantage. They need a moat. Check them out. Have you checked the moat? First question. Second question, have you checked the quality of the moat? As Rob Vinal is saying, the moat is never stable. It's either decaying or improving, either decaying or deepening. You want to be invested in businesses with an improving moat, a deepening moat over time. So you may argue that Meta Platforms has a moat that is increasing year over year. With more regulation, with more stuff, it's almost impossible for a startup to come and disrupt them. You have even TikTok. I mean, the Meta Platforms business model didn't change, didn't budge. Instagram, WhatsApp, Facebook, nothing changed. And maybe you won't say the same about another tech company. Maybe the moat is decreasing year over year, especially with AI. So check the valuation if this is check the moat. Check the moat if the moat is going to increase over the next 5 years or not. If you don't know how to answer this question, that may be a red flag. So that's quite important. You want to invest in winners, not losers. Okay, next one, check the future prospects. FP, future prospects. Basically, when you run your DCF, when you do a valuation of a stock, you want to anticipate, forecast what the next revenues will be, what the earnings will be, what the free cash flows will be for the next 3 years, 5 years, 10 years. Maybe it's impossible to forecast the next 10 years. It's impossible to forecast the next 5 years. Maybe you can try to forecast, guesstimate the next 3 years. Have you checked the future prospect? Have you checked what the management has said for the guidance of the CEO? For example, what is the guidance for NVIDIA? What is the CEO saying? Over the next 5 years, we will do X amount of revenue, X amount of earnings. Check. Are they optimistic? Or not, and you want to see the bull thesis, maybe a bear thesis. Some companies may be conservative and put a low number for the guidance. You want to be aware of the guidance, where management is thinking. And the last point for this video, and after this you will do something else with your life, is, I put twice valuation. That's it for this video. So yeah, check this. This is a checklist for you. You pitch to a child, then try to destroy your own idea. Check the valuation, check the moat, and the future prospects. If you do everything right, and if you run through these filters, this quick screener, you will be much more confident, because you will only invest in the best companies that you know really well, that you can be proud of being a shareholder. That's the point of this video. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description, and I'll see you on the other side.